Hey, what's going on, guys? This is Terrence Ray, and this is a live stock market update. Right now, in the market, we're showing S&P 500 futures are down about 42 handles. We got the Nasdaq futures down 209 handles, and look like we getting a little boost to the downside. The market opened up low this morning. So what they're saying is inflation inflation, basically, and the risk of interest rate cuts being pushed out further. I mean, my bet is you won't get any. I don't even think they'll cut at all this year, to be honest with you, as long as the market is up. Now, if the market goes down, then they may cut. Right. So if we see the market go down, then that'll give them a reason to cut. But I don't think they'll cut. As if the market continues to go up, then yeah, I can't see them cutting. And you may say like, well, that doesn't have anything to do with the stock market. It shouldn't, those things should it the actual, the market that everyday people live in should matter more than the stock market. But I don't think that it does. At least they're not showing it politically. Because most of the time when we see them talking about when you're watching TV or you're watching the president speak or some political figure and they're talking about the market's doing fine, they're going off of numbers like CPI, core inflation. Um, they're looking at numbers that don't even have that don't factor in energy, or gasoline prices. It's not factoring in rent. So the stuff that affects the everyday person, it's not even factoring those numbers in. But I don't want to go down that rabbit hole just too far. We're gonna stick with the markets, and then I'm gonna come back to that in a little bit, though. So as you look over here to the left, I tell you guys all the time, if you want to, you can copy my watch list. I don't know if you're able to see it on the phone if you're looking at it, but if you have pull it up on your computer, the way I have it set up, I can look at the first all the way down to the XLF and the XLE. So basically, these top 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, these first 13 symbols right here tells me what the market is doing. Now, right here where the red is, this is your S&P 500 futures, your Nasdaq futures, your Dow futures, and your Russell futures. Those move overnight. So it'll tell me like how the market is going to open. Right up here at the top is your VIX and then your VIX futures, which is green. So that's letting me know that volatility is expanding. I've been on volatility and talking about it for the last week or so, letting us know that it's prevalent in the market. And when that is there, that is bearish for the overall market. Now, looking at I have a chart up of the SPX. This is the S&P 500, and you can see here is the expected move for the week. We had a larger than usual expected move this week, but as you can see, we've been inside of that range. So if you would have sold something here, basically like an iron condor or either a strangle, you would be in the money right now. You would have made money this week so far, and you probably would have been able to close it for about half, 50% of the profit by now. Now it did come down on Wednesday around this area, push back. Thursday around this area, push back. Now we're watching today. The market is coming back down. Now I'm telling you, if we break out of this range, I don't know if we'll get it today. The market got a lot of juice, and I'm gonna show you where the juice is coming from. Just hang tight. Right now, if the market breaks out of this range, to the downside, I really think we're gonna get a large move um, in equities. Now, a bearish sign for the day, also one of those 13 is the XLF. These are the financials. The financials are down. This is the XLF is only a $40, uh, $40 stop. It's $40.26. It's down 34 cents today. Now you may say, man, that's it's almost a percent. That's a pretty big move for the XLF. So that's telling us that banks are down, and the banks have been going down the last what? This is the fourth day. Excuse me. Now, if you're just looking at this, you can see, and I'm just now pulling this up to look at it live. So got a almost like a head and shoulders. This would be the head, shoulder, shoulder. Um, and now we got this little down move right here. So if I was to pull up the banks, which I can, you can see here's JP Morgan, gap down today. Goldman Sachs, um, Goldman Sachs down, and that's a Goldman Sachs. That's a nice bear flag right there. Um, it's down, and look at this area right here. So you got a lot of support right here in Goldman Sachs, right? So I expect it may chop around in this area, but once it breaks out of this area right here, you can see right here, here's a lot of support. So if I was to bring this over, but after that, look where after that, if it gets through here, it'll fall. Now, if financials go down, the market will go down, in my opinion. I can't see the market continuing to go up as long as banks are coming down. Also, let's see if we can find another one. We'll pull up. I'll go ahead and pull up City. Look at City. City is down. I think City actually had decent earnings, but I don't even think it matters. Let's look at Morgan Stanley. Look at Morgan Stanley. That's crazy. Look at that candlestick yesterday. That's a crazy candlestick. It got some support right here. Break through this level. It can go down some more. Let's take a look at Wells Fargo. Wells Fargo doesn't look too bad. It's holding, but it does have. I could see it coming down to $52 easy. Let's take a look at Bank of America. And they were interviewing Larry Fink on CNBC. I was watching it right before um, I came on to do the stream, and he was talking about some of the bearishness or the bear signals in the market. You can see nice little rounding off up here in Bank of America. But the story of the day that that they aren't talking about at all. They glance or like they say something over and then they keep going. Is the move in gold. This is a crazy move in gold. This is crazy. Like so, this is a daily chart. Now, if I come look at this on a weekly chart, look at this on a weekly. This move is bananas. You don't get moves like this normally in gold. Look at it. This is a 3-year chart. I'm zooming out 3 years. Look at gold. So what that's telling you now, obviously, I don't know if I'm gonna go into the geopolitics real quick. So I seen something today. I woke up and seen. I don't know exactly when it was put out last night or this morning. I was on X, and the intelligence is saying that there possibly could be an attack. Iran could strike Israel, right? And uh, that they're saying that that may be driving the price of gold, that may be driving what's going on. Not really sure of that, right? But you don't have to know exactly what the news is if you know how the news represents itself in the market. Gold, that means that gold hardly ever moves like this. It hardly, so 2 weeks in a row we got candles like this. Then you had a candle like this a few weeks back. It hardly ever moves like this. People are buying gold, which is running the price of gold up. As I'm doing this video, it's going crazy. There's a there's an IVR of 125. Like so when commodities don't crash down, generally they don't. There's rare cases they do, but generally commodities crash up. So you're getting a crash in gold, but because it's going up, you may not recognize it as a crash. It's crashing up. And this isn't your everyday investor. Everyday investors can't afford to buy gold. Like the gold futures going up like this, and it's going up crazy as I'm speaking and doing it. This is bananas. Now, also, I put a trade on it here earlier. I put on if you're watching this video, even if you're watching it after me going live, please hit the like button. Um, I'm getting ready to go over a live gold futures trade that I put on. Let's go. So when you're on the TastyTrade platform and you're looking, um, you see how these are like bright white or they're separated from the gray. Here, this is the one that I would trade. Like you always want to trade the one that is um the actual futures that are, I guess, like the front month, what we would call it. And then it'll rotate to the next month right here and in June, and then you'll have then it'll rotate again. And you can see that there are different prices for it. So this is the price for it here, and then when it goes over in June, it has another price. You can trade these, but I would not trade these. Now there is action out here too, just coming out here. This is another like signal to let you know that something's going on in gold, because I'm in a back month of gold, and you can see I see thousands of contracts out here. Thousands, thousands, thousands. There's liquidity out here. To go out 74 days, there's liquidity out here. So, but I went 46 days right here, May 28th. And just to show you guys, I do put my money where my mouth is. A lot of times, like if I'm doing technical analysis, I got a level up here at 2,500 where I think gold will hit. I bought a call spread. It's a cheap way of trading gold. I bought the 24.95 and then sold the 2,500. Um, it cost me 130, $130 to put on, and max profit is $370. So basically, I'm risking one to make about three. Um, so with that being said, I just need the more. I needed to go to this price point. Now, it's a low probability trade because I did it out of the money. I normally would be at the money buying call spreads if I'm bullish, and that's a better way to do it. But you can make more money doing it this way. And I actually think with the market moving like it is, and the IV is expanding in gold. Just a minute ago, I did it was 125. Now it's 126. It's going crazy right now, and that is showing, in my opinion, that there's risk in the market. I talked about all that stuff just to say this: the market is telling us by this big move in gold that, hey, the market sees risk. There's risk somewhere in the market, and something is going on. So it's flashing like, hey, it's flat. This is like your check engine light coming on in your car. That hey, something going on with the car and you need to fix it. So it doesn't matter whether you just own stock or you own doesn't matter what you do as far as investing. Even in the real world, uh, let's take it out of investing and let's just talk about what it means when gold goes like this. That's letting us know that something is going on in the world, guys. Um, you need to pay attention to what's going on in the world. This stuff like this does not happen every day. I don't even know why they're not. This should be the number one thing that everybody should be talking about when they come on the news today is gold prices going high because that's also saying that there may be a threat to currencies. The value of currency could be going down. Now I've seen news postings and I've seen some headlines about Russia and China buying gold. I also seen just before I came on that China is advising some of their companies and um, some of their businesses to move away from foreign chips. Basically, I guess they're gonna concentrate on the chips that they make. So their economics is warfare, and it seems like all the nations are getting ready for something. And this surge in gold is telling you that. I'm gonna show you another thing that I just noticed while I'm doing this video. The VVIX. VVIX is volatility of the VIX. Now, this line up here, this line you see right here at 110, that is my um all you know what breaks loose line. And I was taught that if the VVIX gets up, anytime the VVIX is up around 110, like it's a lot going on in the market. Like, all you know what is getting ready to break loose in the markets. And the VVIX has jumped in one day today. And if you look at it in 2 days, it was down here around like 78. And it's all the way up here at 100 and climbing. It was not even that high when the market opened because I was looking at it. The 9-day VIX, if you look at the 9-day VIX, it's jumping. So we got a lot of risk going on. I've already shown you guys how I'm looking to take advantage of this by getting long gold. Um, I like this trade right here. And also, another thing you can do. I also have a short call spread on in the Qs, which isn't working out currently right now. I have to admit, I'm down a few bucks in it, but I still think that the market um, is just waiting to break out. And for some reason, it seems like all the big news happened over the weekend when the markets closed. So I want to have some short positions on. I can get out of this, and I can get out of this trade if I come in, because like I said, equities don't generally crash up; they crash down. So I'm not worried about it like popping and going crazy over the weekend. But I do want to be able to take advantage of a big move down if we come in on Monday and something happens over the weekend. Meta is down about 1.5%. Just noticed that, which really isn't that much. Looking at it, it seems like a lot, because it's an $8 move, but it's a $515 stock. So that's really a big nothing burger. But everything in the market, if we looking at, especially the stocks that are up now, Apple is one that has been beaten down, and Apple is making the last couple of days. Apple has made a strong move up, so that's actually a good sign, I think, for the overall market. Seeing Apple make a move up, Amazon, we can see Amazon has been drifting higher. Um, I would be curious to see how this what this pattern looks like at the end of the day. If it stays, if the market, if Amazon stays right, if this candlestick stays in here, that would be a nice harami at the top of a trading pattern. So you had to break out of the trading pattern and you get a harami. That may be a bear setup. So this is something that I may put. Just to be honest, I may put a short in on this position at the end of the day. So I'll watch this and see. I want to see how what this candlestick looks like at the end of the day, and the type of move that I'm talking about that I would do. I would probably come right here in May. The only thing I don't like just looking at it, we got $5 wide strikes. I would rather have dollar wide strikes. I could come in here and put a cheap put spread on. And right now it's trading at about where it should. It's priced right. Saying 248 for a $5 wide. You don't want to pay more than 250, and that's what it would be. Buy the 190, sell the 185, and the expected move is $15. That's more than enough to get you paid on that trade. You don't even need that big of a move, in my opinion, to get paid. Get about a $9, $10 move to the downside, and you can make a little money on that. So I'm going to, and no, I don't have like a bear case for Amazon, other than the fact that look what it's doing. You don't need on those put spreads. You only need it to, pop down into here somewhere, maybe a 7 or 8. I would say maybe an $8 move would get you paid, make you about $100, real easy. And if I throw my indicators on, let's see if we got any, and you can see that it is, um, we can see that it is overbought on the stochastic, not necessarily on the RSI. So we'll just see. I like that setup though. I wish it was like on the update, to be honest with you. In order to put that on, let's take a look at Google. Google is up. Well, it has been going up on the day. It's a green candle, so it looked like it opened up or opened and maybe it gapped up, and then now it's pulling back. It's relatively flat on the day. Microsoft is in a range. You can see we got a squeeze on in Microsoft right here. Got the red dots. Uh, Tesla, Tesla in a range. So right now, Nvidia is down about 1.5%, which really, with these two candlesticks right here, I was kind of watching the video to see, like, hey, it may pop and take this out. There's no way I shorten the video though. I just don't. Um, if you want to, if anything, I'd be looking to get long the video. Obviously, I'd want to see me. I want to see it get outside of here. So if it break 975, I actually would buy it. Like break 975 and then I'd buy it higher. No, that sounds crazy. But looking at this chart, I don't want to short. I wouldn't short nothing now. If it break down below 830, maybe I'd short. Break below 830, maybe take it down to 750. Excuse me. Boeing, Boeing making lows. Um, I stay away from Boeing, even though it's low. They say buy low and sell high. I don't know. It seems like every time I turn on, I wake up and look at X. It looks like Boeing is get some more news coming out. Somebody testifying or something else coming out. Caterpillar is down on the day. So all of my only bright spot for the market I see, we got Apple is up, and then we got energy is up. Now bonds are up. Now that is actually a good thing for the market. That's positive. When we see bonds up, the bonds are up and the notes are up. But they've been getting killed so much that when you see that it's up, and so take a look at my Let's take all the, I'm gonna move these indicators to make it easier to see. Let's hide them. You can see I did from this low to this high. I threw my fibs on. See how the market came like right here, this trend line here, and then also my 618 retracement, and you got a little bit of a bump right here. So that's pretty positive. Now, with it hidden right there, let's see what happens if we get a move to the upside in bonds. Let's see if it at least pings back up around this way. Now I predict now if it goes down and takes this out and goes below this area, that won't be good at all. Breaks below this area, then I think it can go down to this next fib retracement level, which I don't think will be good. Whenever we see the market down and we also see bonds down as well, that's a double whammy. And we can look at let's go back to gold. This is the story of the day though. Watching this go, it gapped up. Like I said, my next target for gold is right up around 2,500. Nice round number. I think we can get that. I think we can get that pretty easy. Um, I close this position out too if it makes it up there. Whatever I make on it, um, I'll take it off because I think once we hit this level, we may see some chop, may even fall back down to around in here. Then I think it'll take off again. I think gold might hit all these levels all the way up until around, we'll call it 2850 maybe. Definitely 28, I think. So I think it'll keep going to get up there. And you may say, well, why take off the position if it goes there? Because with it being an option, uh I got time. So I got 46 days. But when it hits that, a lot of times when it hits a level, sometimes you can get chopped. Like right when it hit here, you don't know how many days it's gonna chop there. And then sometimes it just stayed here, which would have been fine. But sometimes it could hit and then chop and then come back down. And so I'd rather than trying to wait till it goes back up again, I just take profit off, let it fall, then buy it again. I'll continue to probably trade in and out of gold. If you don't trade futures, one thing you can trade in gold is GLD. You can trade GLD, which you can see is mimicking gold, and that's one way um, of if you want to get some exposure to gold. And there are some gold stocks. Let's see if I can remember. I think Newmont is a gold stock. NEM. You can see it's up. And if I would have been, there are people that's all they do is pay attention to gold. This would have been one where it gave you the signal. You see the head down here. Here's your head, shoulder, this whole area right here. So this would have been your consolidation. So you could have had a neckline like maybe right here. Then when the market gapped up, took this out, could have got in here, or just bought it straight off the gap right here, the gap up. Excuse me. There are some more. Let's look at GDX. Look at the gold miners. This is the gold miners ETF, and you can see it's up. So here are ways of playing. Now the gold miners GDX actually, I think it pays like a yearly dividend. It's showing a dividend, but that was on December 18th, 2023. Um, so I think it only pays like a yearly dividend. Let's look at GDXJ. Same thing. So I'm just going over stocks that if you can't trade futures, you don't know how, don't feel comfortable, you can trade these particular ones that I went over. I just went over some gold stocks and that mimic gold. Um, Also, I do want to take a look at let's do something. Let's look at I'm gonna look at the Euro USD or the Euro FX futures. Now, this is odd. Now you have the euro actually going down. Well, I did say that gold could be showing risk to some um could be showing risk to some currencies, right? So we see gold going up, we see the euro down. Let's see if we can let's take a look at the British pound. It's going down, right? Let's look at the Canadian dollar. So that holds true. I said gold going up, so that's showing risk to uh that's showing risk to currencies. Now the dollar, one of the ways to look at the yen is kind of like flat. It's been trending down, but it's holding right here because that's kind of like a proxy for the dollar. Like you look at the yen is like the yen would have been crashing, then I would have said, hey, the dollar's going up. But let me see if there's a way to look at can't trade the dollar. They won't let you. I'm trying to see if it'll show me a chart of the dollar futures. And I don't think it is a way. Let's see. I'm gonna see if I can figure out a way to get a chart of the dollar futures up here. Uh what is it? UUP? I think this is a dollar index trust. So UUP. So this should mimic the chart of the dollar. Um and you can see that it's actually up, which is odd. But I would say that maybe we'll see some resistance right here. Now, like I said, this is a dollar index trust. It's like I think it's like an ETF, but this is a way of showing like a chart of the dollar. So this would, if I pulled up, if I were to go to another platform like TradingView or something like that and pulled up like a dollar chart, it should look similar to this. And you would think that with gold blasting like it is, that I would think that this would be going down. So I would be skeptical of it. I wouldn't be any long any dollar positions. You can see the other currencies. I think I pulled up all of them. All of them were only one I didn't look up was the Australian. Let's look up the Aussie. You can see it's down. So here's your Australian dollar. So with gold going the way that it is, all the other dollar currencies are down. So it's definitely risk. And we can see just as I'm talking to you guys, another thing I want to bring up that I noticed and that you want to pay attention to is how is Bitcoin. So Bitcoin, if I was talking to a Bitcoin maximalist, I would say, now I'll trade anything, right? If you follow the channel long enough, you know that I'll trade anything. Well, why isn't Bitcoin going up? Bitcoin is going with the market. That's why I have it over here now. I've added it to my watch list. It's down. The market is down, but gold is up. So if there's risk in the market, and it is, and we see it, why isn't Bitcoin moving with gold? Why is Bitcoin diverging from gold? That's a question that, you would want to ask yourself. You would think that Bitcoin would be moving up. Bitcoin is moving right along with the market. Meaning, if you losing money in the market and you thinking that you're going to hedge by owning Bitcoin, and nah, you losing money in both. Right now, gold is acting as the hedge, right, to the overall market. And we starting to see, I don't know if something else came out since I've been on, but we're starting to see the S&P 500. Look at it, the futures are moving down, taking a leg lower. Let's see. This is a this is a 1 minute chart. Oh, I take all this off, make it blank. But You guys can see it's heading lower. So this is a 1 minute chart. I'm gonna put it on 1 day just so we can look and see what the chart looked like today. So I think I came on and did started this video right around 10:06. This candlestick here, and since I've been on, you can see the market is sold off some more. Now, I may look at the minute chart not to necessarily trade, but just to do just as I showed you guys just now. I just want to see, be able to come on here and then look and see what the market has done, what it's doing real time. And also, I have another screen. So a lot of times I pop this out. I can click this arrow right here. All right. And then it will pop this out and I will move this over to another screen. And then I can watch real time what the market is doing. So we can see, let's check on my call spread over in the Qs. We can see that it's pulling back in. And I do have levels for the NASDAQ. I have the next level in the NASDAQ that I have down is 430. Um, I do own a put in the SPY, and I own the put down here right around, I think I bought the 508 in the SPY, and I bought that in it because I did buy back in um to get long the overall market. And then I said, well, if the market, that's because I thought, well, say if the market break out. Now I'm talking about in another portfolio, well, I will buy stock in. So if the market was to turn and go up, I can, or it continues to go sideways, I can collect dividends or whatnot. But if it goes down, I hedge my little down position. I buy put. So I did buy the 508 because I did tell you guys that I manage my 401k. So I own the overall market by owning the SPY, and then I'll buy options around it. Like if the market starts to sell off, then I'll trade it to the downside. Nothing big, just just little small positions to offset what may happen. Now I may go out and get some more going into this weekend. I don't know. We'll see. But you can see here's the day. Here's the candlestick today. And we're gonna see if it take this low out right here. Let's go look at where we at. Here's the SPX. Now here's the expected move right here. So let's watch and see. Now it came down to here Wednesday, Thursday. Let's see if this holds today. Let's see. And we still got a lot more still got a lot left, a lot more trading for the day today. So if we see it come down and then break through here, we may get a real big move next week. Let's look at, I'm gonna come back and do a weekend video, and I already see something, but I'm gonna save that for the weekend video. Make sure you are a subscriber and you get my weekend updates. My weekend videos help get you ready for the next week. And next week I already know gonna be fire. So um especially when we see vol moving like it is. I don't know if I went over the VIX 9 day, but look at it. It's crazy. So your 9 day VIX, look at it. It's up like $5, 581. It's a crazy move. So in the 9 day VIX, and we still got room to go on the stochastic. So these are, for me, this is all bears for the market. Vol is expanding. The VVIX is getting close to the uh HE double hockey stick breaking loose line. When we get there, we can look for some nice we got gold. So we got gold continuing to go up. We got gold going up. We got a VVIX that's expanding. That's the volatility of the VIX. We got the 9 day VIX going up and expanding. We got Bitcoin selling off. Yeah. Another thing that I look at from time to time that I looked at today, junk bonds are down. That's another proxy. You don't have to really pay. There's just some certain things that I look at that I know that I start looking at when I be like, okay, it's almost time. It's almost time for a big move. Emerging markets ETF, the EEM, Got a nice red candlestick right here. That's going down. XHB, which is your home builders ETF. I got levels on it. As you can see, we are already at a level right here. It's going down. So we got a lot of risk in the market. Uh, get ready to wrap this up. Like I said, I may come back at the end of the day. I just want to see we'll see what's going on going into the close. I may come back and take you guys into the close if we get we get we get a big sell off going. I won't come back if it stays where it's at. But if we can get this, we get 100 handles on the S&P 500 on the futures, I'll come back on because that's a big day. And with that, guys, be safe out there. Know your risk. And if you are trading, this is a great day, in my opinion, to do like some day trading and scalping because you're getting big moves. We may even get another big move towards the end of the day to the upside, may get a rally. So these are great days to scalp and trade in. Just be careful. Trade small. Pay attention to gold. That is telling us that there's a lot of risk out there. Gold moving like it is, and I want to emphasize, is showing us that there is not just only risk to the markets. There's real world risk because this is not when gold is moving like this. This is not retail traders. These are not the apes. You can't, the apes can't afford to buy gold, physical gold. And this is a big product. So I wouldn't even advise trading this a retail trader. The way I did it with a call spread was real cheap. And I know what I'm doing. I can handle the risk and I know how to get out of that. Don't follow me into that if you don't know what you're doing. A smaller way of trading gold is you can trade M was it forward slash the micro gold, and even trading that with it moving like this. This is I want to say this is like a $600 move. 'Cause it may be more than that. I'd have to go check. I think it's for every tick would be like a buck. So it'd be $10 for each. Yeah, so that's a $610 move in the micros. So and I think like in the regular one, this is like a $6,000 move. So if I'm not mistaken, just be careful and hit that like button, hit the subscribe button, and I'll be back later, guys. Peace.